Hello and welcome to a conversation happening at dinner tables in high school guidance counselor offices in the anxious minds of millions of Americans. It's a huge question that defines futures and shapes our society. Is going to college in the United States still worth it? For generations, the answer was a resounding yes. A college degree was the non-negotiable ticket to the middle class. It promised a better life, a more stable career, and a higher income. It was the cornerstone of the American dream. Work hard, get the diploma, be set. But today, in 2025, that promise feels a lot more complicated. The landscape has shifted dramatically. We hear stories of crippling student debt, graduates working jobs that don't require a degree, so we're going to investigate. Does the investment pay off? All right, let's talk numbers. The cost of college has not just risen, it has skyrocketed. To understand the present, we have to look at the past. Back in 1980, the average annual cost for tuition, fees, room and board at a four-year private university was about $17,000 in today's money. For a public university, it was around $8,000. Now, let's fast forward to today, August 29, 2025. The College Board reports that the average cost for a single year at a private university is now over $60,000. For a public in-state university, the average is hovering around $28,000 per year. So, a four-year degree could theoretically land somewhere between $112,000 and $240,000. And that's just the average sticker price. This doesn't even account for books, supplies, transportation, or the occasional late-night pizza. These figures are so large they can feel abstract, almost unreal. But wait, you might be thinking, nobody actually pays the sticker price, right? Financial aid, scholarships, and grants are crucial parts of this story. However, the net price, what a student actually pays after grants and scholarships, is still incredibly high. For 2023-24, the average net price at a four-year private university was about $33,000, public about $19,000. Even with aid, we're talking about a financial commitment akin to a down payment on a house. The core problem is that tuition has been rising much faster than inflation and family incomes. Economists call it a cost disease. The price of the service rises faster than other goods. The result, higher education is increasingly becoming a luxury good, accessible primarily to the well-off or those willing to take big financial risks, or those willing to take on significant financial risk. Because most families can't just write a check for $100,000 or more, the conversation about college costs inevitably leads us to debt. Student loans have become almost automatic. They are the financial bridge that allows millions to cross into enrollment. But this bridge comes with a hefty toll, one that is paid back over years and sometimes decades. According to the most recent data from 2024, about 60% of students who earn a bachelor's degree graduate with debt, and the average amount for those borrowers is just shy of $30,000. Now, $30,000 might not sound terrifying, but it is a substantial burden for someone starting their career. That often translates to a monthly payment of several $100s alongside rent, car payments, groceries, and all the other costs of being an adult. It can delay major life milestones like buying a home, starting a family, or even saving for retirement. Furthermore, that $30,000 is an average. It hides a huge range of experiences. Many graduate with little. Some graduate with six-figure debt, especially in fields like law or medicine. The debt isn't just a number, it's a source of immense psychological stress. It can dictate career choices, forcing graduates to take higher-paying jobs they don't love. This reliance on debt has created a profound generational shift. Previous generations often built wealth immediately. Many today start in a hole and work for years to get back to zero. Okay, so we've established that college is expensive and often leads to debt. Now we get to the other side of the equation. Money. Does a college degree actually lead to a higher income? The data is remarkably consistent and clear. Short answer, yes. On average, people with a bachelor's degree earn significantly more than those with only a high school diploma. This earnings premium is the central economic argument in favor of college. In 2024, median weekly earnings for high school diploma about $850, bachelor's degree about $1,430 per week. Difference, nearly $580 each week, roughly $30,000 a year. Over a 40-year career, more than $1 million in extra earnings. That's staggering. The degree isn't just for the first job, it unlocks a higher ceiling, benefits like health insurance, retirement plans, paid time off. But nuance matters. These are averages, they can mislead. Returns vary wildly by major and institution, from computer science at elite schools to low-paying majors at expensive colleges. Individual choices matter as much as the credential itself. Beyond the paycheck, a college degree is also supposed to open doors to better and more stable job opportunities. The conventional wisdom is that a bachelor's degree is a shield against unemployment, and the broad statistical data tends to support this idea. In times of recession, the unemployment rate for those with a bachelor's is consistently lower than for those with only a high school diploma. For example, in early 2025, the unemployment rate for college grads was around 2.2%, versus roughly 4% for high school grads. Employers use degrees as a signal: perseverance, critical thinking, the ability to complete long-term projects. However, there's a growing and troubling counter-narrative: underemployment. Underemployment is when a college graduate works in a job that doesn't require their degree. Recent studies suggest more than 40% of recent grads are underemployed in their first job out of college. For many, this is temporary. For a substantial number, it persists, preventing realization of the degree's full economic benefit. Are we producing more graduates than there are college-level jobs? Or are universities teaching skills employers don't need? The job market is evolving rapidly, with demand for technical skills that traditional liberal arts programs may not provide. The type of degree and practical skills matter more than ever. Just having a degree is no longer a guarantee of a good job. Applied experience and aligned skills often make the difference. We've touched on student debt, but it's essential to zoom out and see the sheer magnitude of the student loan crisis. The numbers are almost difficult to comprehend. The total outstanding student loan debt has surpassed $1.75 trillion. That's more than credit card debt and auto loan debt. It's a monumental figure affecting millions. More than 43 million Americans hold this debt, roughly 1 in 8 people in the U.S. The burden isn't distributed evenly. Women hold nearly 2/3 of the debt. Black graduates borrow more and face greater challenges. A ladder of opportunity is becoming a source of disparity. This crisis impacts life decisions, delaying homeownership, marriages, and business formation, a drag on economic growth. The federal government holds over 90% of student loans, fueling political debate about forgiveness, income-driven plans, and tuition-free proposals. The debates are complex and contentious, but nearly everyone agrees the system as is unsustainable. Narrator, VO. For so long, the cultural narrative in America has been college for all. Narrator, VO. But given high costs and risks, we need an honest conversation about other paths to success. Narrator, VO. These alternatives are not second best. For many, they're a better fit. Narrator, VO. One promising alternative is the skilled trades. We are facing a massive shortage of electricians, plumbers, welders, and technicians. Narrator, VO. These are not low-paying jobs. Many trades wage earn comparable or higher than college grads early in careers. Narrator, VO. Apprenticeships let you earn while you learn and graduate with a valuable certification and often zero debt. Narrator, VO. Community college is an underestimated pathway, affordable and practical. Narrator, VO. 2 years can lead to an associate's degree or technical certification in fields like nursing, IT support, or manufacturing. Narrator, VO. Or use community college as a 2+2, save tens of thousands, then transfer to finish a bachelor's. Narrator, VO. Beyond trades, online certifications and boot camps offer fast, cheaper routes into fields like data analytics, digital marketing, UX, and software engineering. Narrator, VO. The best boot camps have strong placement records, turning novices into job-ready candidates in months. Narrator, VO. These pathways emphasize practical, job-relevant skills and can be faster and cheaper than a traditional degree. Narrator, VO. For many people, these options are not just viable, they're preferable. So, we've arrived at the grand finale of our calculation. We have the pros on one side and the cons on the other. On the pro side, college graduates on average earn significantly more over their lifetimes and face lower unemployment with better benefits. On the con side, the price tag is astronomical, forcing many into decades of debt and delayed milestones. Underemployment erodes the financial value of a degree for many. Meanwhile, skilled trades and other alternatives can deliver strong returns without the same cost. The truth, it's not a simple yes or no. College is an investment. The outcome depends on price paid and return received. A CS degree from a state school with minimal debt is likely a great investment. An expensive private degree in a low-paying field financed with high-interest loans could be disastrous. The decision requires a personal cost-benefit analysis, major, job prospects, institution reputation, and expected debt and payments. We have journeyed through sticker shock, climbed the mountain of student debt, and compared paychecks and opportunities. We've seen college still out-earn high school, but at a dangerous price for many, and viable alternatives exist. My answer, a qualified, cautious, it depends. Don't pick based on prestige alone. Think like an investor. Maximize benefits, minimize cost, avoid high-interest private loans. Consider in-state public schools, community college transfers, or targeted credentials and apprenticeships. Research job prospects, salary data, graduation and placement rates, and calculate monthly payments before enrolling. A degree should be a stepping stone, not a millstone. Ultimately, the goal isn't the degree, it's building a life. Thanks for watching.